It's trap after trap after trap, and yet again another crypto trap has been set. The late buyers that jumped in yesterday on high leverage are currently getting flushed. We'll talk about it. We'll see, will bulls be able to snap back price and reclaim some of those key levels? Yesterday we're looking at certain levels to hold. That did not happen. We'll cover this in today's show. If we just quickly go through to the charts over here, I did update everyone in 𝗨𝗏 yesterday, watching to see if you get something like this. I was looking for a pullback into the confluent area, which was the red box, a big SR flip level, right? Confluence between the SR flip on an hourly time frame, the 50 EMA on the hourly fair value gap 50%, or the golden pocket, and high-low territory coming into that area of interest. And I specifically said to them afterwards in 𝗨𝗏, I'm not going to take any trade unless it's going to be a manual trade. So I'm going to execute manually, waiting for that. And that's the reason why. Price going straight through that level over there. This was the confluence zone. So what's next, right? There is a potential for a Monday range trade strategy to kick into play, which means sweeping of the Monday low, reclaim that level, and you can potentially look for longs. But wait for the low timeframes when we'll talk about that. I'll show you what you're going to be looking for. It's very volatile out there. And this is what we said. We said very, very likely over the next week or two, you're going to continue that whipsaw effect with big fluctuating ranges, a lot of chop within the market over there, something that you do want to be very, very, very cautious of. And at least this has been my advice to 𝗨𝗏 as of this morning, is that the most fruitful participants in the market have been those who have been patient and haven't forced any of the trades, right? And I said over here, it's like a washing machine out there. Even some of the best traders are getting rinsed. And you know, the success you're going to find is probably going to be focusing on those lower time frames. Things like the Monday range trade strategy, which we're going to look at today. You have to wait for Monday's range to actually print out before you can take that kind of a trade. But as always, I want to start off with the high time frames. One of the things we looked at yesterday, as always, we said very unlikely that gold has topped. There's a lot of top callers on gold. And there it was, new all-time highs once again, right? Yesterday put in new all-time highs. I said personally, I wouldn't be shorting this thing. Gold looks pretty powerful to me. And now we can raise the level. This is all that you just keep doing, right? Just hold that long on gold. If you took the original trades with us, we'll make this a bit bigger so it stands out a bit more like a sore thumb. We'll put on 3 points over there, and it's our yellow dotted line. Now you can just raise that level. There it is. 4,170. Continue to maintain long exposure on gold as long as it remains above 4,170. This is using the 4-hourly trend to govern that momentum, and I have no doubts eventually this will top. We all saw the pictures circulating on X and social media where people were standing in lines for gold, like typical retail at the top, trying to hoard physical gold, queues for days, right? Looking to get their exposure, and that happened somewhere around here. So remember, the crowds will still get that profitable trade, right? Those people hoarding physical gold, they'll probably get higher prices, but eventually that thing is going to snap down, set in a lower high. Gold would have topped. Many are looking for the rotational play between gold into Bitcoin. We spoke about that as well. To assess that, we need to look at the gold BTC chart, which we'll bring up just now in a moment, right? We'll get to that. Let's quickly look at silver. Silver looks a little bit different to gold on the 4-hourly time frame, putting in a lower high over here. So not as strong or powerful. Think of Bitcoin versus ETH. Gold versus silver. Gold is the leader. Gold is for lack of any other word, the gold standard, right? It is the gold standard out there. We spoke about the S&P 500. We said that if the S&P 500 starts to break into new all-time highs, there's a good chance that Bitcoin will do the same. Well, this was on the daily time frame that we highlighted this. You've now come into that area. This is the big zone that you want to see bulls try and fight through and reclaim. On the 4-hourly time frame, this is theoretically a potential for a rejective zone. So you want to be careful of that you don't set in a lower high. That's the order block that led to the breakdown. I'll just move this a little bit to the left so as not to confuse you, the long trade tool. But the order block that led to the breakdown, the first test of that order block is oftentimes rejective. As you saw over here, price came down. Second test, potentially rejective. If you put in a high low over here on the 4-hourly, chances are the daily will breach through this level. And then we said that crypto has a good chance of following along. But we have to look at a whole lot of things on crypto, because crypto can also top before the stock market does within a cyclical fashion. And then you can see the stock market continuing towards the upside. So although there's some level of correlation, you don't necessarily want to treat it that way forever. You want to treat each chart independently in terms of your actual trades and your actual entries. So a quick look over here at the Whale Trades website, long to short ratio, negative 3.54% skew over there. It's decent. It's not that bad. We look to this to try and sense when the scales are tipped a little bit too far in one direction or the other, and then you look for that mean reversion trade. Is this enough to get a mean reversion trade with a snapback in the form of a short squeeze? I don't think so. Not enough. It's not enough. And I'm going to show you why as well when we look at that weekly time frame. Vital week that bulls do strike back. It's very pressing time-wise, right? The clock is ticking. We spoke about this last week. We said we've got about 2 weeks in which you want to see bulls snap price back, recover certain key levels, or it can get ugly very quickly. It can hurt, as the title suggests over here. So you can see compression over here in terms of the total liquidations dropping off from yesterday was 500 million, today 322 million, and the majority coming from the long side, showing that the market is compressing, right? And we can see that on this chart as well. We're only just getting that expansion now. We haven't really the train hasn't really left the station. And in this instance, the train leaving the station is typically used in a bullish terminology. That's not necessarily what I mean. I just mean the train leading the station in terms of the next major move. Daily exchange volume, 7-day moving average continues to crater. This is probably one of the more bearish signals that's out there. I'm just being honest. You guys know how it is. I always say it as it is. This is not a good sign. And you would want to see this put in some sort of a high-low, maybe a back test into this $75 billion range. If you can throw a horizontal in here and a diagonal that matches up at that 75 billion, this is going to be pretty critical. You want to see bulls bounce price off of this level. That's going to be super significant. And really, not only this week, but the whole of next week is going to be very significant that you keep monitoring this chart. If this chart falls through over here and continues its downward momentum, this is not a good sign, right? Then you have to consider maybe there's a possibility that even if the S&P 500 does continue to new all-time highs, maybe that's it for Bitcoin. Maybe Bitcoin is dropping off and deviating, which is similar to what we saw back at the end of 2021. Remember that Bitcoin topped in November 2021, started to slowly distribute. And what happened to the stock market? The stock market continued up, I think, for another 2-3 months after that. So something noteworthy, something to pay attention to. Economic events, also pay attention to the economic calendar. A lot of the data, because of the government shutdown, has actually been withheld. And today there's some important things coming out. Non-farm payrolls, unemployment rate, and initial jobless claims. This does drive the overall market, right? To suggest, where is the market economically? Is it healthy? Is the economic cycle still healthy or not? So we'll see what happens with that data. Very high likelihood that will drive the next major move. And then I actually wanted to just quickly check out the flows, which we haven't looked at for quite some time. Let's go on the top 50 and look on the weekly. Where is the buyers? We know where the sellers are. That's everywhere. But in terms of coins or coin picks, Zcash, Pump, TRX, XAUT, and interestingly enough, BCH have some net inflows over there. So those are the main drivers in terms of buy volume. And that's not really saying much, because even Pump had a little bit of a move, basically given up all of those gains over there. So sellers seem to be in full control. And that's where we go into the weekly time frame, which, to be honest with you, if it closes like this or worse, is not going to be looking good. Before we touch on that weekly time frame, let's actually go to the poll. Please vote over there. How will October's candle close? Green and bullish, 36% of you believe that. Only just green and neutral, meaning that, you know, maybe you have a lot of whipsaw on the monthly time frame and you just marginally close green. That's 26% of you. Red and bearish, 26%, and only slightly red and somewhat neutral is 12% of you. As always, we have an extremely divided community, a very divided community that watch the show. You guys are always like split in quarters over there for the most part. It's very rare that we find everybody skewed on one side over there. So guys, go smash the like button. It really helps to get the show content out there. And then let's look at the Bitcoin weekly and move through the rest of the time frame. So as it currently stands, we've spoken about the significance of this level. This is a very big SR flip level. Vitally important that this level holds. The significance of this week's candle is the following. One, If you do close like this or lower, what's going to look like a rejection off of the 21 EMA. And for the first time in a very long time, that 21 EMA will be angled towards the downside. And if you guys have followed me and you've done things like whale school and you've been through those lessons, well, you know what I say about that. That is essentially a very, very, very bearish signal. And in theory, over time, if you predict this, if you use this as a predictive signal, and you historically work out the numbers, this is proven to be a very, very, very strong exit signal from the market. When price is capped below it and it's angled towards the downside, you out. When price is above it and it's angled bullishly towards the upside, while you're in the market. And over time, this has produced much better results, significantly better than just a buy and hold strategy on Bitcoin, right? Now, there will be a lot of support. $100,000, beautiful round psychological numbers, still 6-digit Bitcoin. You have the 50 moving average, which is also coming in on the weekly. So that can bounce price. But if that bounce leads into lower high, of course, that's where the trouble comes into play. So ultimately, if you're bullish, what you want to see is you want to see this candle close green for the week. You want price to get back above that 21 EMA. Otherwise, it's very risky, right? The risk factors have been the following. You have also your stop and reversal indicators, which have been breached. They're now acting as resistance over price, and they'll start to accelerate towards the downside if bulls don't bounce price. So you are caught in an interesting environment for the following reasons. Again, we said there's multiple different bearish factors. One, breaking below the 21 EMA. 2, stop and reversal indicators are breached. But the bigger indication is going to be 3 red weekly candles in a row. This in itself becomes a very, very, very strong signal. Anytime in the past that we've seen 3 red candles in a row on a weekly scale, it does initiate the start of a trend, which doesn't necessarily mean a bear market, but it could mean a much longer term correction. So those are the bearish factors. The bullish factors that you have working for you right now is theoretically this is SR flip region, support flip or resistance flipped into support territory. You have the all important 50% Fibonacci level, and you have your 50 MA. So your job as a trader or technical analyst is to try and take those trades at the extremities. Therefore, the extremity becomes, if you hit that $100,000 zone, that becomes the last gasp of air for the bulls, right? You better hope they take a big breath and pump price up from there, because if they don't, well, that's where things start to fall apart. And then we do have to entertain the possibility of the bear market, which is totally on time. By the way, 1,070-ish days following the exact bottom of the cycle is where typically expect those bear markets to start. So at the end of the day, we're coming off of massive contraction on the Bollinger Band width percentile. And for the first time in a long time, this has pretty much been contracting ever since the 3rd week of August, contracted all the way through for a whole month into the 3rd week of September. The Bollinger Band width percentile started to slowly get liftoff. And basically, if we're going from the 3rd week of August all the way to now almost the 3rd week of October, that's 2 months of contracting in a tight range. It's now peaking its head, right? It's peaking its head over that green line, which is the 10th percentile mark. We've got the actual Bollinger Band above it. The moving average is shortly following behind. And if this is going to be the real move, well, you're expecting sizable moves in the coming weeks, right? We spoke about this. On the bullish perspective, that could be enough to send Bitcoin as high as just below $200,000. But in the bearish perspective, this can drop Bitcoin by 40% quite easily, which you can do the math. That takes you down to 40%. We have to consider from when the signal hits. Let's work that out. Actually, 40% could take you down, back to close to the 200-week moving average. That would be 49% of 55K. 40% down would take you to 65K, depending on when that signal fires off. So you want to get your pivot levels absolutely precise and perfect. And you want to, most importantly, stick to the trend. Why? The trend is your friend till the end of the trend. And if that trend is coming to its end, well, you'd expect weekly closes below the 21 EMA, and that begins to roll over. I know a lot of people in the space are hyper-focused on the 50 moving average, which for this bull cycle has held a lot of significance, right? But for me, that's a very late signal. This is why we spoke about the second that price came down over here and you broke that stop and reversal indicator. We were so close to creating on the weekly scale a bearish engulfing candle, and that was a major, major warning sign that you want to be hyper careful within the market. So looking at this over here, MACD continues to move towards the downside. The bullish hopium over here is that you're going to find support on that RSI. Just go back to yesterday's video if you want to find out more about that. The theory is that most of the time we're finding support around that 50 level. You can bob and weave. It gets very scary over there. But if bulls can fight back and defend this level over here, there is a little bit of hopium. Breaking that supporting trend line down for the RSI would be a bad sign, right? That would tell you that you're probably going to accelerate towards the downside. Also, very quickly and important to mention is the timing. Okay, this can be used in a couple of different ways. Now, the expectation is that the corrections in a bull cycle become shorter and shorter and shorter. And if bulls are in control, you don't expect them to go through very long corrections. So we're starting to teeter on a longer term correction right now. If you're measuring from, let's say, especially if you're considering things like the fear and greed index, although price went a little bit higher the end of September, the real fear and greed index started to pick up around this candle, which is now already putting this correction in at about 10 weeks. So I'm kind of I'm giving the bears the benefit of the doubt and kind of negating that candle and not starting the count from there, because it's more about where was the fear and greed, right? Price had been consolidating, you broke into new all-time highs, and now you've been in this theoretical correction phase for 10 bars, which is 10 weeks. Notice the pattern: 38, 9, 5. Now you're going to 10. If this were, if the bulls were in control right now, in very, very strong control, this is getting a little bit long for my liking. I would have personally wanted to see on this candle, which let's just rewind this and go over there. 7, right? 7 was okay. You started to break into all-time highs, but they should have followed through over there. They should have led to continuation. Basically, what I'm suggesting is a bearish weekly candle close this week is not going to be a good sign for the bulls. Yes, I also told you to study the volume in the event that a potential bear trap, or excuse me, a bull trap gets set into play, whereby the market gets incredibly bullish at those highs to only get flushed. And some of the things that you had to look at was that daily exchange volume coming towards the downside. The other things that I told you to look out for is the daily volume, right? The daily volume is getting lower and lower. So it started to rise ever so slightly and then immediately got faded. But look at the volume difference between the red candles and the green candles, and look at compared to these candles over here. So any of the green candles with those pushes up, it's just showing you that the bulls are getting less and less volume as they're attempting to push price higher and higher. So notice these green volume candles over here with that little bit of an up move, these green volume candles over here, much lower than the previous ones. It shows you that to an extent, the wind is out the sails, and the bulls need something, right? They need some sort of magic to come into play. So also, our RSI continues to trend towards the downside. We were temporarily above that pivot level, but similar to the volume, you weren't able to sustain that. You only had one candle closing above that RSI pivot level, and then after that, you began to drop towards the downside. The real troubling signal is, the witches and the moon phases, right? That's coming out. That is coming out now officially. There it is. Bear moon has arrived. So I thought it was going to be tomorrow, but it's actually today. Bear moon has officially arrived. So pack it up. All right, pack it up. The bear moon has arrived. Just kidding, guys. Look, we'll see what happens over here. You've already had quite an extended sell-off. At the end of the day, price action trumps all. For those of you that are new and think I've lost my mind, just ask anyone else in the chat. We've been using the moons for years now. Very, very, very successful. We like to use it with confluence of other factors. And therefore, I kind of put these things together. So if you're printing a bear moon with that rejection on the 21 EMA, that's not really a good sign, right? That's not really a good sign. So again, I want to go back to my advice, my non-financial advice, that is, because I'm not a financial advisor. T's and C's apply. My advice to the whale room community was this, right? Was focus on one trade at a time, right? I said I believe that the success in the market right now is being found by focusing on lower time frames. You look at those lower time frames like the hourly, and you just take one trade at a time. The best possible trade on that day. If it lines up and it becomes a high probability trade setup, you execute, you take it. Stop trying to swing for home runs, right? So just take the singles. It depends if you're a cricket or a baseball person. Home runs, sixes if you're in cricket. Just take the singles. Just block and take the single. Take the run, make some money, exit, and that's it, right? Keep the risk slightly smaller and live to fight another day, the big swings will come, right? The big swings will come because the market is incredibly choppy right now, and it's really hurting a lot of people. So we'll see what happens over here. This rejection could easily lead to lower lows. I don't want to count the chickens before they hatch. As per my advice to Whale Room, I'm more focusing on the low time frames, and I'm simply just taking one trade at a time, right? So if there's a good trade setup, we'll execute. If not, we'll just sit on our hands, and that is that. I know a lot of you are longer term traders, so you're probably hoping for higher prices. Well, look towards where the liquidity is. If this continues to stack up on the upside, which is not that high, remember we consider a high number on the liquidity for the weekly chart, anything that's around about 150 million plus. This is 96 million, and it's coming in at 113,700. The problem with that is still a major daily resistance. Really, for bulls to recapture strength, and this number will change. So don't be confused if you're somebody that's new here and I say a different number 3 or 4 days from now. As you print lower highs each time, it changes the number. As of today, the number to reclaim, you need to see bulls get back above about 115,000, which means even taking this liquidity theoretically doesn't solve your problem, right? It doesn't solve your problem over there. And we spoke about yesterday the USDT dominance, where in the next 2 weeks, we need to see big rejection and rapid drawdown over there in order to get the bulls what they would be looking for and what they'd want. So it's, possible. It's still possible. This could still be that choppy environment, but I definitely wouldn't want to see the USDT dominance trading back above 5.26%, especially on a closing basis. For the bullish case, which I must tell you, look, I don't necessarily pick sides, but obviously I have a natural bias of what I hope for and what I'd want. Understand that of course, I'm right here on YouTube. How many of you do you think will still be around if we go down 70%? Of course, I prefer the upside. I want the upside, but I'm also a realist, and I'm telling you what I see in the market. So anything that begins to close back above here is going to be absolutely detrimental to the bull market. It's going to create a lot of damage. There's still a chance. There's still a chance you would want to see within the next 2 weeks this beginning to move its way down. And by the time we get into November, you would need to be breaking down major key levels to get acceleration of that bull market, right? So we can look at USDT. We've been monitoring it on the daily time frame. You got a beautiful rejection from this first level, and that's what we need to see. We said that yesterday the level to break down was this over here where my little arrow is pointing. That is in alignment with the 50-200 EMA, which is about to get a bullish cross, and the previous high low. We're working our way down, and now you're starting to spike up. So if you get green candles closing over here, then the next level to break down is going to be raised to there, right? That's the level that you'd want to see broken down. Also, if we do get strong daily closes over here on the USDT dominance above that level, this becomes your next target, right? So then you're playing this as an upside move, and that's going to create a lot of damage within the market in terms of downside moves against the rest of crypto. Remember, for anyone new over here, when this chart goes up, it creates a lot of pain and damage to the broader crypto market. When this chart goes down, it's, everything is great and everything is pumping. So if you get that type of move, everything is wonderful and pumping in the crypto sphere. Okay, so we'll keep a close, keen eye out on this. I'm still leaving this as the level to take out. I'm not going to raise the bar just yet, but monitor this chart on the lower time frames. Okay, I know a lot of people are looking at the rate cuts and things like that. So as in All In 24 says over here, rate cuts next week. A lot of people also believe that rate cuts are very bullish, but I want to be crystal clear. This is just the story and a narrative. It's not the reality and the truth. Yes, to an extent, cutting rates drives liquidity and prices go higher, but eventually it gets to a point where the rate cuts become more and more aggressive, and that actually ushers in the end of the cycle. I'll have to pull up the chart from Fed Tools site for you guys, maybe tomorrow, or maybe I'll try to tweet about it or something. But you can go and look at where all the major other recessions came into play. The Fed were cutting interest rates very aggressively, and the rates were dropping like a stone. And that's what brought in recession. And then you had a massive collapse. I'm not saying that's going to happen with this week's cut. I'm just saying in general, the broader trend, that's what happens. The chart will make much more sense for you guys tomorrow when I show that to you. I'll make a mental note and I'll bring that into tomorrow's video. Also, guys, if you want to learn more about the markets, please join us in Whale School. We had an absolutely amazing session yesterday. Again, we spoke specifically about using chart patterns, ranges, and trends, and then we went into market cycle theory and how to structure your portfolio based on where we're at within a market cycle. So what I found is that most of the people that come through Whale School end up understanding the show content a lot better, and they're much more profitable as well when they're actually in Whale Room. So those that go to Whale School and then they come to Whale Room, because that way we can actually interact with them and see where they're at on their journey, they're much, much, much better off and much more profitable because we're all on the same page, right? So if you want to understand things at a deeper level and unlock full access, there's links in the description below to Whale School. Remember, it is free. You need to sign up using an exchange link so that we can verify you. I do recommend 𝗨𝗏𝗏 because they have no KYC, great fees over there. And on top of that, you get sign-up bonuses and rewards. There's a video even below that shows you how to claim your bonus. So once you've signed up, you'll need to go through and you'll copy your user ID. By copying that, you can see I've copied it over there. It's in the top right under your profile. You'll then come through and you'll say, submit your user ID. So underneath it says you've already used the link. So there it is, you've already used the link. Click on that button, go through to the drop down, select 𝗨𝗏𝗏, copy and paste that in, click submit your user ID, and then your next step would be to deposit $100 to prove you're human, because there's no KYC, and that's it, you're in. And then you can come and watch all those videos and attend all the workshops for life, right? You'll never be cut off from the opportunity to attend the live workshops that we do, which I do, I think I do about 3 a month, 3 of those workshops a month. Alrighty. Now let's have a look at ETH. So again, it's not all over. It's not all doomsday over here within the markets. Right now, if ETH starts to close multiple candles below this pink horizontal over here, which is your range high breakout level, of course, that's going to look bad. It's going to look like a deviation, and you may be going lower, even as low as $2,800, which becomes the mid-range. But if there was a horse that I was going to bet on, I would still be looking towards ETH rather than any of the other altcoins. And that's simply for the fact that ETH continues against BTC to attempt to hold this level. This is your higher low territory, which you're expecting. This could send ETH as high as 0.05 to 0.055, right? Off of that next bounce, which means your outperformance from the current level against Bitcoin could be as much as 50%. You could make 50% more Bitcoin. Now, I'm absolutely not advocating that you go and sell any of your Bitcoin for Ethereum, just by the way. I'm simply just stating that this picture can change very, very, very quickly the second that these candles begin to turn green, and it may be a choppy, difficult ride. But if you can reclaim and get back about 4,000 over here with a couple of candle closes, just imagine what this will start to look like as a chart, right? This will start to look like a massive demand, which it is. This is a demand zone on the weekly scale. And if this week's candle does somehow close green over here, it's going to look good, right? It's going to show you that the last couple of weeks, buyers continue to step in. We don't have that right now. Closing below here will be very bearish, which is why these weekly candle closes are absolutely vital, right? So you don't need to count your chickens before they hatch. You can just wait for the weekly confirmation closes. You'll still get a great trade on your hands, right? You can buy over here with stop losses floating below, but they're quite wide. I'd prefer to look for a better trigger plan, like on the hourly or the low time frame charts. And if you get those candles closing up here, 4,000, 4,200, the ETH long trade is back on the table, and your measured move takes you just under $7,000, which is around an 80% move, I believe, which is pretty solid over there. Alrighty. What else? What else do we have? So let's just quickly go to is it on here? Yes, BTC against gold, right? Let's have a look at BTC against gold, since this is becoming the flavor of the week. You are definitely at key support. This is for sure key support. So again, similar to how we looked at USDT dominance goes up, then we expect that crypto goes down. Well, if USDT dominance begins to drop and gold does start to distribute, I don't expect that, I wouldn't jump in front of a moving train right now. Gold is very, very, very powerful. But if you do start to see gold consolidate, so it's up here like this, if gold starts to consolidate a little bit and chop about, maybe put in some small lower highs and things like that, then yes, this could start to send price higher. But I don't think you need to rush into it. This is going to be a key area of support, right? It might drop a little bit lower, similar to this period over here. You might drop a little bit lower, and then you're going to wait for the reclaim. That reclaim would tell you the rotation is on, and then at least you can trade that up to about 30. So as of right now, today, gold is still outperforming Bitcoin in the short term, right? Gold is very, very, very strong against BTC over here. Let's see on some of these low time frames. Let's go on the 4 hour. Okay, 4 hour, I mean, let's see, maybe you put in a bit of a high low, any sort of a divergence. Not really over there. So we'll keep an eye on this. There's nothing major to mention. We'll keep an eye on that. I want to move on to more of the Monday ranges, right? Some of these lower time frames. So as you can see over here, if you look on the hourly time frame, you have already lost the Monday low for Ethereum specifically. For BTC, very, very, very close. Just let that load up, but you haven't swept it yet. So if you do start to see a bit of a sweep over here, something like this, there you go. In the short term, you can be looking for the long trade. If you came to yesterday's Whale School session, you'd know what I'm talking about. But you can trade that towards the mid-range. You can see over there, more or less, mid-range, that becomes a long trade up to 109,000. And if you can trade it all the way up to the high, you're looking at about 112,000. So again, just going back to my messaging over here, these are really the only trades that I'm looking for, is low time frame trades, right? I'm looking for Monday range trades. I'm just looking to make, risk a few dollars. There we go. Maybe risking, for example, 1.38% on that trade. And we're looking to make, based off of that, 3R, 2.9R, right? So we risk $1, we make almost $3. Or you risk $1,000, you make $3,000, or $10,000, and you make $30,000. These are the trade setups that I'm looking for, but we do need confirmation, right? So I'm not going to blindly long something like this over here. On the hourly, you can see it's still pretty bearish. It's still dropping. You get your momentum oscillator resetting over here, which is all great and well. But I'm looking for some cleaner price action over here. This also, by the way, has been a buildup of liquidity. Let's just remove that. We're on the wrong chart. This has been a buildup of liquidity over here, right? Which you've swept. So there you can see on the hourly, test, broken. Now, as long as you remain below that, you risk coming a little bit low to about 105,980. Call it 106,000 as the next major support over there. Alrighty. So yeah, Asia has not been favorable. This is it's the Asians. They keep dumping price. The Chinese, it's China. China is dumping the price in the morning. The Asia session, going into New York session, then the US are trying to pick price back up again. And there's been some interesting theories about that as well, how the president of China actually sold a massive amount of Bitcoin leading into the Trump inauguration. And it's kind of like this war between China and the US. And then the US keeps buying the crypto up. So we'll see what happens over here. And for the late members, NSSY, when bear moon today? We have the bear moon. The bear moon has officially arrived. The bear moon has officially arrived. There it is. It's printed. It's there. Let's quickly look at the TD sequential as well, just out of interest sake. What are we on? Let's quickly see over here. What are we on the TD sequential? We'll turn off some of these indicators to not make too much mess. Nothing significant, right? Nothing significant on the TD sequential. This came very close to a 9 top. There you can see an 8 and drawdown, right? So it actually worked out over there. 9 buy, price pump. 9 buy, price pumped. TD sequential 9 top, price drew down. So also working out very well. I'll leave that indicator on and we'll see if we get a 9 buy on the daily. And I'll let you guys know then. It's going to probably be an opportunity at some point. Alrighty. What else? Okay, let's see. 9 top on gold. We can have a look at that. I'll probably have to stick on this chart though. Let's quickly go to stocks. Let's go to gold over here. So let that load up. Might be on a different time frame. Let's go on a weekly. Okay, so we got a 9 top on gold on the weekly, but this is still a powerful trend. Look at this. Remember, the TD sequential could just mean a pause, right? So as you can see over here, 9 top, small pullback, rips. It just suggests a 1 to 4 correction in the form of either consolidation or pullback. So you might go 1 to 4 candles sideways or 1 to 4 candles down. Alrighty, I think a lot of people are trying to short gold. They're just adding liquidity over there, getting price higher. Okay, let me check your guys' comments over here. What else have we got going on? Also, guys, if you didn't watch the video on the Tangem wallet, final reminder, I think it's your last chance to get it for 15% off. They're going to remove that opportunity over there. They may have already removed it, which means you get 10% off. But the Tangem wallet, if you want to protect your crypto leading into the bear market, there is a link in the description below over here for a Tangem hardware wallet. Basically, it just links to your phone, and you literally just take your mobile device, whether you're on Apple or Android, you go onto the app, and then you literally just tap it on the back like that, and it unlocks full access, as opposed to connecting, for example, a ledger where you have to type in all the PIN codes and stuff. So I think for people that are more like on the move, this is a great alternative if you want to still be ultra secure. They've never been hacked before, so if you want to remain ultra secure, you get the cards and the ring and everything. It's all linked below. Just click that link for 10 to 15% off. I don't know if they're still giving you the 15% off. You may have had to take advantage of that on the weekend. Let's just quickly see what have we got over here. So you are still okay. You're getting 10% off plus 15% off. I think it depends on which pack you're taking. I made a video about this on Saturday over the weekend. If you just go and look for that video, I'm holding up the ring and the card. Okay. That's probably the last time I'm going to mention this. So for anyone that wants to take advantage of that, you won't get this kind of savings anywhere. This is a specific opportunity that we created just for you guys. Okay, for the Banter fam. Alrighty, looking at Bitcoin on the daily though, what is interesting about this as well is this is really a significant level in terms of the Monday range. So if you can sweep that low on the Monday range trade, and you should probably go through a bunch of charts to see if it's exactly the same thing, because look at this. Do you see over here, you also have your monthly low, your previous month's low. So not only do you have a monthly low, this can be viewed in two ways, right? The first way is if you deviate this, which means simply you just break below and you recover, you have a place to put your stop loss, and therefore you have the long trade set up. You can trade it to the previous month's mid-range and just above Monday's high, and possibly higher after that. But it's a double-edged sword, because if you can't get above it, well, now you're losing something very significant, right? You're breaking to new monthly lows. So that means that the monthly candle took out last month's candle low, which means on a monthly scale, you have continuation towards the downside on a very high time frame, which is not good, right? But look for the confluence. Sometimes bulls fight back in the dying seconds, and the monthly candle would actually have to close like that to suggest continuation. Hence my question over here, how you think October candle is going to close. So if we look at Ethereum just on those high time frames over here, I know there's a lot of lines there for you guys to look at, but just specifically focus on where those monthly lows are. So you've broken below the Monday low, the monthly low is also right over there, which means if bulls step in over there, that theoretically is a little bit of a hopium demand zone. Let's just chuck that line in over there. There we go, that area. Okay, we got XRP. XRP is already below the monthly low, so a lot weaker. What about Solana? I'm going to have to clean all these charts up, guys. I do apologize. There's so many lines and things. We're obviously trading this on a lower time frame. Solana below the previous month's low and below the yearly open, which means this is a very important level for Solana to get back above. If you're bullish on Solana, you really want to see Solana recover here. Look at this. If you look to the left-hand side, all of this has been very significant, right? All the way back. Look at this. This whole area has been very, very, very important. Literal order block that led to the breakdown, resistance, rejects price, deviates, fails over there, support rallies up, and what's going to happen next? I don't know. This is the level to reclaim. You want to see Solana get back above that 190 zone. SUI. Okay, let's have a look at SUI. So very weak, relative speaking. It's below the previous month's low. Of course, you're sweeping the Monday low as well. Yeah, let's not even go into some of these other ones. All right. What about Ledger? Ledger M8, or are you calling me your mate? I think you're calling me your mate. Ledger's great. Ledger is amazing as well. Ledger's very, very, very good. So we try bring you high quality stuff, right? You'll notice that we're not shilling tier 5 projects or tier 5 companies over here for hardware wallets. We want you with the best of the best. I think that I don't have any affiliation to Trezor. I think Trezor is great. Ledger is great. Tangem is great. These are amazing security wallets. Okay, cool. Aster, let's have a look at Aster. I do want to have a look at Aster over here quickly. We'll go into the hourly time frame and just see relative to the Monday range. So Aster, you're going to have a little bit of a downtrend that's forming over here. If you can break back above that and reclaim the Monday low, there is a low time frame trade opportunity. But let's also quickly have a look on some of the high time frames like the daily. So because it's got a lack of chart history, it's a little bit tough to really make any kind of conclusion on Aster. You're going to have to trigger your trades on a low time frame. Otherwise, the only thing we honestly have to work with is these major lows. There's going to be support over here in the 70 to 80 cents region if these levels get lost. That's your next hopium zone. Okay, next hopium zone is coming into play over there. Look, guys, tomorrow we'll focus a little bit more on altcoins. For today, I just wanted to let you know that basically if this candle closes red this week, which you need this intra-week play to manage your risk, continue to manage the risk over here, this will be very bearish. Low time frame, the hourly chart, you want to see if those Monday lows get swept and then reclaims. Those Monday lows on a lot of the altcoins out there as well are lining up with the previous month's lows. So it's a very important and significant level to defend for price. The S&P 500, I stick with what I said yesterday. The chances are higher than not, if the S&P 500 breaks into new all-time highs, that crypto will probably catch some sort of a bid. But yeah, very choppy environment. Personally, what am I doing with my own stuff? Mostly I'm sticking to the low time frames. I'm just taking the best trade one step in front of the other, right? One step at a time. You take the step, you pause, you evaluate things, then you take the next step. Blindly buying and holding anything in this market has been very difficult, and you'll probably get really hurt. Your extremities for major support levels is going to be that $100,000 level. Very significant. If you see price come into there, you would expect that there should be some sort of a bounce, and then we can reevaluate what happens following that bounce. So it is still a risky environment. If we look at totals very quickly, this is the big SR flip region, which means previous resistance, and you really want to see this flipped into support. Total 2, which can go to as well over here, a little bit weaker, right? A little bit weaker than total 1. So total 1, which is the entire crypto market cap, super important that you see price hold over here at 3.63 trillion. If you start to bleed out over here, it's going to get bad, right? Then your next level of support is coming at 3.15 trillion. Okay, this is also your 50% level where we're currently capped. Alrighty, what else? Anything else noteworthy to mention? What you can do is you can also let me know in the comments if there's something specific you want covered in the video. I'll have a look at the post-show comments. So smash the like button, guys. Please make sure that you get into Whale School if you're not already there. I can't emphasize enough how important it is, because anyone that's coming into the market now for the first time, if you haven't done Whale School, you won't know how to think relative to where we act cyclically and how to play the market. There's a time and a place to hold a portfolio. There's a time and a place to be very concentrated. And I want to explain all of that to you in the workshops. You have to come to the workshops. And the only way you get there is unlocking full access. Okay, so I'll see you guys in the next one. I hope you have a good day. Thank you so much for joining. I do appreciate each and every single one of you. We'll see you guys tomorrow. Cheers for now.